Thanks for joining us today for our discussion on small cap strategies with ProShares. I'm Catherine Yoshimoto with FTSE Russell, and I'm pleased to have here with me today Simeon Hyman with ProShares. Welcome, Simeon. We'll
Thanks for having
discuss,
me.
yeah, we'll discuss the benefits of small cap stocks and some index funds that are available through ProShares ETFs. We aren't providing investment advice, so this discussion is for informational purposes only. So, going on to, this is the disclosure slide. And going to the main topic today, the Russell 2000 Index. I'd like to kick off with a few highlights about the Russell 2000 Index. The Russell 2000 Index is the first U.S. small cap benchmark launched in 1984, part of a comprehensive and modular framework that Russell Investments launched with a healthy ecosystem of assets benchmarked and options and futures and volume activity today. The diversification benefits of the Russell 2000 index can be seen in the sector diversification. If you compare the Russell 2000's sector breakdown compared to the Russell 1000, which is very tech heavy, you can see that the small caps can offer diversification opportunities, and you can see this also at the stock level. In terms of characteristics, the small cap companies offer, if you're looking at the higher quality small caps, if you look at the price to earnings ratio without negative earnings, they actually look cheaper than large caps. So, this is potentially a good opportunity to look at small caps, but look at an additional screen, such as looking for quality companies that pay increasing dividends over several years, or in the case of the dividend growth index, 10 years. And you can also look to the Russell 2000 for more domestic exposure to the United States. Some market participants are concerned about maybe what's going on the global stage. And then if you look at the US, on the other hand, the being more insulated from global revenues and non-US revenues are higher for the large caps, meaning the Russell 2000 actually gets more revenues from within the United States, which could be appealing. As you also look at valuations, as large caps might potentially be viewed as overvalued, and small caps provide opportunities. But also in terms of the stability of the the U.S. companies, relatively speaking, the size of the Russell 2000 companies could be larger compared to the rest of the world. The US exposure within a global index is 60-70% for US market caps. So, just thinking about it in that context, Russell 2000 provides a good way to measure small cap companies that potentially on a global scale are relatively investable compared to some other, opportunity sets. So today, again, we're happy to have Simeon here from ProShares to talk about income now and income later concept. So tell us a little bit more about this and how it can be applied to the Russell 2000.
Well, thanks again for having me. And we are very proud to offer two innovative ETFs that are based on the Russell 2000, the flagship small cap benchmark. And indeed, we're characterizing them as income now and income later. ITWO, ProShares Russell 2000 High Income ETF, is an innovative covered call strategy offering a very generous current level of income and distributions. And that pairs very nicely with SMDV, our ProShares Russell 2000 Dividend Growers ETF, which offers the advantage of healthy growth of dividends over time, providing an important growing income stream for that income later piece. A very nice combination.
Great. And tell us more about ITWO, or I2, I believe is how you pronounce it.
We'll go with I2. And the innovation here is moving from a monthly covered call strategy to a covered call strategy driven by daily options. Here, what we're looking at is the challenge with traditional covered call strategies. In a traditional covered call strategy, you write or sell a call, which sells away the upside to the equities that you're holding 1 month at a time. And when you do that, imagine the equity market, the Russell 2000 in this case, goes up at the beginning of the month. you are called away, you're done, you're capped, you're not participating in the market for perhaps 25, 26, 27 days or more. And here, what we're showing in the blue line is the SIBO Russell 2000 Buy Right Index, a benchmark of traditional covered call, monthly covered call strategy on the Russell 2. And indeed, you have gotten barely more than half of the return of the Russell 2000. You come to the Russell 2000 for performance, but a traditional covered call strategy just can't deliver it. And that's the innovation of I2, now with a daily a covered call strategy driven by daily options. You can see here healthy, very healthy income, an annualized distribution rate of just under 14%. But now that you're executing your strategy on a daily basis, you have the opportunity to get the full returns of the Russell 2000 over time and capture the returns that a monthly strategy can sacrifice, because you might be called away today, but you're back in the game tomorrow. And of course, on average, the Russell 2000 or any equity index moves a lot less in one day than it does in a month. And so, this key innovation of being powered by daily options offers a tremendous advantage over the traditional strategies.
Excellent. That sounds like a really interesting and innovative strategy. Now, how about our 10-year anniversary honoree, SMDV?
Well, here's our income later idea. And these are the dividend distributions of SMDV over the last 10 years. And what you can see here is that those dividends have more than doubled in that 10-year period. Talk about the quintessential inflation hedge. The growth of dividends is one of the most powerful antidotes to inflation. That's why you're in equities. You're in equities for growth, because after all, if you've got an equity that isn't growing its earnings and its dividends, doesn't it really look like a bond? And that's exactly what we're solving here for SMDV, as you had mentioned. These are the stocks in the Russell 2000 that have grown their dividends for 10 straight years. Not only are they consistent, but they're also prolific in their dividend growth. The other point that we like to make about the dividend growth strategy is that it is a key marker of quality. Dividends can't be made out of thin air. They have to come from fundamentals. And what we're seeing here is the powerful difference between some of the fundamentals of the Russell 2000 Dividend Growth Index, SMDV's index, and the overall Russell 2000. Much, much stronger return on equity, much stronger profit margins, tautologically a higher dividend yield. But check this out, they actually are on sale. You are getting all that quality for less than half of the PE of the broad Russell 2000. So not only is it an evergreen strategy, but it's a particularly timely one as well.
Yeah, great point about quality and how the valuations might be attractive in the current market environment. Can you give us your thoughts on small caps now?
This is I'd be remiss if I didn't hit the broad backdrop, and you had hinted at it earlier. But indeed, we know that this market for over a decade has been driven by the large and mega cap stocks. But what that has done has pushed the relative valuation of just the broad Russell 2000 to levels below that of even just before the mega cap and tech bubble burst in 2000. Not that we're calling for anything that draconian, but we're observing that small cap stocks relative to large are about as cheap as they've been in a really, really long time. And if you dial up that quality and dividend growth with SMDV, that can be a really prudent way to take advantage of this timely opportunity.
Great. And you have two offerings that you can talk about here, I2 and SMDV. You want to tell us again a little bit more about them?
Yep, here's just some of the stats. I2 and SMDV, their inception dates. We mentioned the 10th anniversary of SMDV. For those who want to look this up on Bloomberg, you have the indices and the exchanges that they trade on.
Excellent. And here's some performance information on both funds available through ProShares. And yeah, contact ProShares for more information on the specifics around the funds that use these strategies. And if you have questions on the indexes like the Russell 2000, Russell 2000 dividend growth, happy to take any questions on the FTSE Russell side. Well, thank you very much, Simeon. It's great to have you here and celebrate this 10-year milestone for the Russell 2000 Dividend Growth Index and SMDV. Here's to another decade of small cap dividends in different packages.
Thank you very much for having me.
Thank you.